Hi, and welcome to my channel. For those of you new, my name is Dave, and I work in financial services, and these videos are a mix in journey towards financial freedom, financial products, financial well-being, so you, like me, can reach your goals sometime in the future. Now let's get into this latest video. Now this latest video is not to boast or brag or say look at me, it's to say, well, if I can build a sizable portfolio, so can you. We just need to, shall we say, put a plan in action. This video is about my self-invested personal pension plan for the review of July 2023. So what's happened, where it's invested, what dividends received, latest valuations. Now I do have a workplace pension from my employer, but I'm limited on the amount I can put in and I'm limited on the funds or investments I make. So the idea of my Sipp is I can pick my own investments. Now the aim of the portfolio for 2023 is an annual growth rate of 10%, annual dividends of £4,500, and a year-end value of £117,000. So how have we done in the month of July? Well, we started the month at £103,095. We ended the month at £106,364. So a profit in the month of £3,269. Not one of our better months, but some kind of recovery. And for the year to date, we've received an annual return of 8.75%. Normal contributions went in of £200, and the government added tax relief of £50 as a basic rate taxpayer, and our monthly fees were about the same of £14.76, but that's based upon a percentage of the portfolio valuation. Where exactly is the portfolio held? Well, predominantly UK based, 83.32% in UK and Europe, 14.39% in USA and Americas, and a tiny fraction, 2.28% in Asia and emerging markets. Now, during the month, we received one dividend from Sainsbury's, the retailer, £109.84, gave us 39 new shares. But across our shares, we've got a yield of 4.08%. And if we look, shall we say, at the chart, we're actually above where we expected. So we've made £2,744.97 this year, above our expectations for the year to date. Now they will drop off in August, but then we'll have a very good month in September. Let's dive into the portfolio and see what sort of shares or holding we own. So first of all, we'll go through our shares. Now we own 15 shares, 9 in profit, 6 in loss. Total share value of £82,407, which makes up 78.38% of our portfolio, of which 67% is in the FTSE 100 and nearly 12% is in the FTSE 250. Now, if you look at the following graphic, the holdings of note. So our largest holding is Aviva, the insurance company, 4,533 shares, £17,500, makes up nearly 17% of our portfolio. Safe, secure, steady, boring, shall we say. Everyone needs insurance, everyone needs investments, pensions, but it's given a very good yield of over 8%. Our next holding is Lloyds Banking Group, 34,427 shares, £50,500, 14.5% of our portfolio. Has struggled lately, but it did have very good results in the quarter. Dividends 0.92 pence against 0.8 pence, so up 15%, and pre-tax profits half year was up 23%. But the banking sector struggled, shall we say, because what's happening in the UK economy. Away from the banks, we own Greggs, 282 shares, nearly £8,000, 7% of our portfolio. Again, some very good results. Dividends will increase from 15p to 16p, and it is growing new shops. Just increased, shall we say, 50 new openings this year, and is expanding, but a very cash-rich company. Another holding we own is Drax, the biomass maker. Has struggled lately, but 1,229 shares, £7,500, nearly 7% of our portfolio, and again, very good interim results. Dividend was increased from 8.4p to 9.2p, so up nearly 10%. But the profit was struggled because it was reducing bad debt, shall we say, and it was, shall we say, expanding into new areas. But a very good company, shall we say, as a long-term hold, and we are up 100% since we bought that share many years ago. And then back to the banks, we own HSBC. 1,122 shares, £7,000, 6.8%, and the results are due out on the 1st of August, so next month video, but it was done for diversification. It's very cash rich and it has reinstated quarterly dividends. And then back onto the insurance companies, we own L&G, the insurance company. 2,047 shares, nearly £5,000, 4.5%, but again, like Aviva, everyone needs insurance. Safe, secure, boring, shall we say, but it is paying a very nice yield of nearly 9%, and hopefully some very good results are out during the middle of August. And then back onto the banking shares, we own Barclays, 3,038 shares, £4,700, 4.5% of our portfolio. Again, some very good results. Dividends were increased up by 20%, has done a share buyback, shall we say, and the profits up for the half year was up 22%. And just like Lloyd's, the margin have increased, shall we say, so better profits moving forwards. Now, other shares we own JD, 3,942 shares, 4% of our portfolio. We own Sainsbury's, as I've said, 1,233 shares, £3,500, 3%. And we own, shall we say, £3,500 in Shell, £2,500 in BP, very good dividends. And for both companies, the dividends being increased by 15%, so a very cash-rich company. But the results have struggled, shall we say, because of the rebound in the oil prices. But again, very cash-rich, will pay us a nice quarterly dividend moving forwards, which we'll reinvest into other shares. Other shares we own, shall we say, is Penn and the Water Company. Has struggled lately because what's happened with, shall we say, sentiment towards UK water companies. We own AG Bar, the drinks or platform provider. We own AJ Bell, the investment provider, and we own Card Factory, the retailer. So let's just say 15 shares. Has given us some nice profits in the month, but more importantly, it's given us some very nice dividends, which we'll reinvest in the portfolio, which mostly will pay between September and October, so our best 2 months for receiving dividends. Well, let's look at what sort of funds we hold in our portfolio. At the moment, we own 5 funds, 4 in profit, 1 in loss, or simplified during the month, but let's just say nearly £23,000, 22% of our portfolio. Our largest holding is a legal and general technology fund. Technology has been a great run in, shall we say, 2023 because of the so-called Big 7, but £8,300 makes up 7.8% of our portfolio. Our next holding is a Fidelity World Index Fund, owns about 1,500 shares, very low cost of 0.12%, makes up 5.3% of our portfolio, but we have topped that fund up this month with £3,700 as a result of selling out of our UK smaller company fund because it was going nowhere, it was just treading water. We own a Valley Gifford Positive Change Fund, £3,532, 3% of our portfolio. We own a UK equity fund, £2,800, 2.5% of our portfolio. Owns, of course, selected companies in the UK, shall we say, Diageo, Stock Exchange, Roke's, but long-term holds. Very selective, but a very good track record because of who the managers are. And our last fund has struggled somewhat. It's a global growth fund, £2,400, makes up 2.3% of our portfolio, but it has struggled since we bought it. But it was bought, let's just say, originally because we were solely UK, solely based in the shares. But let's just say we've simplified the funds moving forwards, and we do normally top up our contributions into the Fidelity World Index Fund. But let's just say a very nice collection of funds. So, an overview of the, shall we say, the holdings. We've had a very good month. We've made over £3,500 in the month, nearly 9% for the year. It's not a get-rich-quick scheme. They're my own personal opinions. Remember, if I can build a portfolio, you can build a portfolio if you put the steps in place and you create, shall we say, something, an action plan. If you like the videos, smash the like button, subscribe to this channel, and we'll see you again soon.